Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Alright, so hi guys, welcome back to another video. This is the Greedy Trader channel. So it's been the weekend and a couple of days and I haven't put up a video, but once again here I am. Now I know you guys who've been following the channel for a while probably get how this goes by now, but for you new traders, this is where we talk about all things market profile. Now, of course, if you are a professional money manager or you are just a normal retail trader, then it's very possible that you may or may not have encountered market profile, but I doubt that money managers haven't. This is a core part of institutional trading, so you will see this time and time again, and it's not a question of whether this is the best way to trade. It's really a question of whether you know that that's the best way to trade. Obviously, I've been in the game for a long time. We're talking plus 15 years, so I've pretty much done everything that a trader is trying to do today, and I've had the ups and downs. I've been in the institutional space. In my case, I've needed to do this to some degree for a living. So as a consequence, we have technically different type of curves when it comes to trading, but I'm sure a lot of people are aspiring, they're money managers or traders, and they want to be able to do this to some degree, and they want some degree of financial freedom, and all of that is pretty good. But if you don't know how to actually do this, then you're not going to get any of those things. So that's kind of why I'm here on the channel. This is why I do what I do. This is why I talk about all the things I do, in addition to my Badger Hive advisory, where I help clients achieve the things they need to achieve when it comes to their investing goals, whether it's teaching them how to do it themselves or whether it is advising them or consulting with them on the best way to improve their technology so they can get the best execution. So that's kind of what we do here. But anyway, if you're new to the channel, welcome aboard. And today I wanted to talk about what are the things that professional money managers or institutional traders tend to do. Now, of course, as you look around and you browse the web, you will see lots and lots and lots and lots of different things said by different types of people in terms of the best way it is to approach trading or investing or building a portfolio. In my case, I don't really think of this. I play at different tables, right? So I don't think about this business in terms of, oh, I'm a professional trader and that person's a hedge fund manager and that person's a money manager. It's really just about juggling your portfolio, right? Trying to achieve the best return you can achieve. You're going to see a lot of different ways to do this. You're going to see a lot of different type of arbitrage opportunities and ways you're going to want to sort of exploit in order to be able to achieve the things that you want to achieve. Now, it is not about telling you that, oh, well, I'm better than you, I can do this better than you, because I'm well aware there are retail traders who can do this better than me, right? And so that's quite fine. It's the nature of the business. But there are specific things that we tend to do as institutional traders, just because one of the things that you don't want to do if you're managing a client's money, or you're managing like a group of clients' money, or you're managing an entire fund with tons of people's money, and maybe this is a regulated entity, what you don't want to be doing is taking risks that weren't prior agreed with whoever you're managing the money for, right? So this is the reason why money managers tend to have stricter rules on themselves, and if they work for a firm, those firms impose them on the money managers, is because they don't want to have to explain to clients why a trader decided today to take a position in corn when the agreement was that we were not going to trade agricultural commodities at all. So if you give a client a thesis as to, you know, what you're going to do, then you best do it, and that requires a level of discipline, which is why, you know, not everybody's a fan of managing other people's money, or they're not a fan of, you know, whatever the case. They just kind of want to do their trading and do their thing, because what it allows them to do is take risks that they hadn't prior agreed with themselves. Now, this is probably one of the downfalls of many traders, is that they don't have a kind of service level agreement with themselves, right? They're not deciding that I'm going to have like a key facts document for myself, the things that I'm going to do that mean that I'm going to achieve a return stream, and I'm not necessarily going to break that disciplinary approach, right? And I think this is like super crucial for people to get their heads around. I don't think that people tend to do that, right? And, you know, it's an important point, you know, however you wish to sort of slice it and dice it. Sorry guys, I'm just looking at the market at the moment, so as I'm going through all of this with you, I'm just looking at positioning, what I'm planning to do. Obviously I'm recording this video right at a time when I'm quite active in the market right now, and I naturally didn't want to do the video recording now, but I figured if I don't do it now, I would have time to do it. I've got something else I want to do after my trading session, so I'm also trying to do this and keep an eye on what effectively is going on. So you'll see me swapping from screen to screen at a point. Okay, so back to where we were. So yeah, so in terms of what we do as money managers is that we would tend to have a few key principles, right? It's like, okay, if I have a thesis, right, and let's say I say, look, primarily I like to look for where other entities, big or small, doesn't really matter, it could be other institutions, etc., where they're most likely to be trapped, right, where they're most likely to extend themselves. So I might pick up, let's take this as a profile chart of the Aussie dollar, and we had this conversation, I believe, a couple of days ago. So if you just go back and look at the YouTube videos, one of the things I was actually saying, and I posted this in the private Discord, and if you haven't got the link, just go down. It is a completely free private Discord, no marketing in there, so just click on the link below and that will take you to the server. And one of the things that I put up there was that, guys, this level here was a squeeze level as far as I'm concerned, and being able to identify where larger players are about to get squeezed is important. There's this fallacy that the only people who like I say, the market, I always say this, markets are a series of fuck-ups, right? The market moves on a series of fuck-ups, and that's it. So I want to know when the next fuck-up is happening, right? Someone is messing up, right? Someone is about to blow their accounts, or they're about to send, you know, decimate their return for the year, whatever. This is when the market gets the most movement, is when people buy in large numbers are wrong. And that could be myself, for example. And that's why risk management is important, but that's a topic for another day. But one of the things I say to traders is that, one, professional traders will always understand where liquidity is, right? So they're going to know where traders have acted historically in the past, and there's a strong area of reference or interest where there's a lot of liquidity. Secondly, they're going to be able to pay attention to what's the biggest reportable positions out there right now in different asset classes, right? What direction are those positions in, and when do those positions, essentially when do those players with those positions run out of money, or when do they feel like their risk has been pushed beyond their own capability to handle, and that is going to cause them to exit. Whether they're going to exit by taking profits or they're going to exit by cutting losses, it will trigger an exit. For most of these players, these things are automatic, so they don't really think about it. It's not like a big deal. It's just one of those things where if something flashes red, everyone takes action. So as a professional trader, you want to understand these kind of things. In addition to that, on the technical level, when we work with a profile, we think about where are people getting squeezed, right? So if you're going to get squeezed, I want to know where, and I want to see the evidence that you're getting squeezed, and then I want to act on that. One of the things that we said, that was last week, I believe, is there is a gap in value with the Aussie. We are trading bids, and we are at historical squeeze territory, right? That's what we said. So there is definitely no surprises. Let's add another one to this. See where we push to. So once again, right, we say, well, no surprises, right, that we saw the Aussie technically running away, right? So long and short of the story is that you need to know these things, right? See, I'm busy playing with the market right now, and the core thing that I'm trying to play with is where are traders potentially being squeezed out of their trades, and that's all I'm ever looking for, right? That is the name of the game that I play, right? I'm purely only interested in squeeze points. I have no other idea, no other thing. Yes, I have a very good understanding of floats, volume weighted average price, VWAP, all of that stuff, right? It's all good. I know what a volume profile is. I've been in the game so long, I don't think there's anything that anyone can talk about that I didn't know. I even know some of the social influencers, you know, like the ICTs of this world. I see what they do, and you know, I mean, you're not going to criticize everybody in terms of how they approach the market. If it works for them, it works for them. But one of the things that we have to be conscious of is telling traders that you can attack the market in various different ways. That is entirely untrue. One of the things that we know, and we know for a fact, is that you need to be looking for where other traders are screwing up, or where they're most likely to screw up, and your whole game plan has to be based on this, because you're going to get the best risk reward trades. You're also going to get the best volatility when that occurs. There's nothing worse than trying to trade a market that is relatively flat or is ultimately struggling, right? We always think that, you know, that's a pretty grim scenario, right? So call a spade, right? We need to understand these things, right? That's the bottom line. We need to understand these things. We can't really be just trading out there and just hitting buy and sell buttons without fully comprehending what it is that we're trying to achieve, right? So for my part, that's kind of what I try and bring to the table, is help traders understand what they exactly need to do, letter for letter, in order for them to be able to maintain their portfolios and achieve a degree of profitability. Whilst it might not happen overnight, because I think my first year of trading, I didn't really have any profitability. I think for 6 months I primarily just, you know, practiced it. I was in a space where, you know, I just couldn't start buying and clicking, you know, and stuff like that. I needed like proper mentorship stuff. I needed to be like understanding that this is how you do it, and I needed to spend a lot of time just practicing how you do it and learning about the things that I needed to learn before I did it. I mean 370 pages of the CME handbook. I've got to read it cover to cover, right? Otherwise I won't be able to talk to you guys about market profile today. You know, I needed to understand wave theory. It's very essential for macro analysis, and I needed to understand that, not from the, you know, the crazy perspective, but from a realistic point of view. How am I going to actually practically use this, and how am I going to risk manage and so on? So when that's done, I learn everything I can learn about options, because that is a barometer of risk, right? So I can look at an option chain and then understand what the underlying is going to do, right? Or what it's most likely to do, and I can do that with a high degree of accuracy, right? Because I'm an active participant in selling premium, so I understand, you know, when option contracts are valued. I can really tell that, and that means that we're going to get a net effect. So we're going to get a crossover effect in the underlying, right? So we're basically going to see the equity of the stock move in line with the information. The option flow will always tell you what's going to happen first, literally. So again, but these are things that I have to gradually learn and understand, and also understand the risk with all these things and the best way to use them, right? So I wasn't clicking Robinhood. Like, that was, you know, Robinhood is a modern thing, like before my time. during my time rather, we had other tools, but there was definitely no Robinhood, right? So you couldn't really trade options that way. So the tools I had are the tools I still use, right? Because those tools were good, right? That's the stuff that hasn't been messed with. That's the stuff where people are not, selling your orders for order flow, order flow for cash, that stuff, right? That's what you get in these kind of mobile apps, this gamification of trading, right? So in this channel, we try and keep it real. We want everyone to know that, trading, you can gamify it if you like, but if you want to do it as a living, you got to really be quite switched on, and there has to be a high level of awareness as you interact with these markets, so yeah. But anyway, guys, without taking this video too long, I haven't really reviewed any assets. This is something that I think is great for traders to see. I have a Discord where I do that more. I think a lot of what I'm going to talk about on the channel are the things that I think traders should be doing before they start getting the market, and the things they should be learning. And you will see that across everything that we do, right? And all the calls that we make and why we make them. I mean, look at the conversation that we had about crude oil, for example, right? We spoke about this, trading into the offers, seeing the reaction there. We're building up bids quite late. We're extending over, we got the next offer stack. So understanding where that liquidity is, and if we do get a failure, what that looks like, where the key positions we want to take the short side, where's the risk, we're going to run into bids along the way, gaps in value, is there any inefficiencies in this market? So these are things you can really do at a glance with the profile. Are we in squeezed territory historically? I mean, what did that look like the last time we squeezed out of there? So these are questions that you want to ask yourself as a trader as you sort of go through your journey, right? But anyway, guys, hope you enjoy the video. Till my next video, adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?